Hello, my name is Brendan. I work for Cradle Accounting, and in this video, I am going to take you through how to calculate an operating lease under ASC 842. ASC 842 is the new lease accounting standard that has come out, and it requires all SEs, so all companies that are leasing an asset, to now bring those leases on balance sheet. So if you want to be compliant with ASC 842 and US GAAP, this is something you're most definitely going to have to do. So it's a lot more complex than previously, where you just expense the lease, just would only impact the income statement. Now it's all coming on balance sheet. So the scenario we are going to go through today is the lease commences January 1st. It ends the end of 2025 in December. We're going to pay every month, and we're going to pay $1,000 on the first day of the month. We've already decided the classification. Again, this is for an operating lease under ASC 842. If you have a finance lease, that follows a different calculation methodology with the right of use asset. The lease liability works exactly the same, but the calculations required to unwind or amortize that right of use asset to zero for a finance lease is completely different. So you'll want to watch that video. Discount rate, we're already decided it's just going to be 7%, and we're jumping ahead here, but we'll end up having to calculate a daily discount rate. So now we have our lease terms. Let's go ahead and calculate the lease, the net present value. From that, we will then derive the journal entries. So this, if you're looking, you don't know where to start with ASC 842, you don't know how to calculate an operating lease, this is your place. Now, I do work for Cradle Accounting, and what the software will do with the company I work for will completely automate all of this. By the time I've talking this introduction, you already have the lease in Cradle. All the calculations will be done, all the journal entries, all the financial reports and disclosures. So there's a huge benefit to doing that, especially if you value your time. Maybe you like to get home a little earlier. If that's the case, check out Cradle. We have a free 30-day trial. But let's get to it. So first thing we want to do is put in the date of the lease. And this will be an important part of our calculation. So the lease starts in 2023, and then we are going to take this lease until, and it doesn't want to populate, but we're going to take it down to the end of 2025, and then we will have all of the applicable dates related to the lease. Common question I receive is, well, why, Brendan, are we doing it daily? Why not monthly? So I'm a former auditor at KPMG. I used to audit lease accounting for large listed companies. Doing a monthly calculation is a workaround. It's not nearly as accurate. You don't have that flexibility. And at the end of the day, it's just a compromise that I don't think you need to make. We just input the dates for a daily calculation. And now I can find out my balance sheet numbers at any point in time. If someone asks me, what are we looking like at a certain period? We've got that. So I just like daily as opposed to monthly. For a variety of reasons, I highly recommend just do daily if you're going to do it manually. Otherwise, just use Cradle. Now we have that, we want to put in our payments. So we are paying every month at the start of the month. So what I'm going to do here is I'm going to add a filter to Excel. Then I'm going to filter for dates. We're paying on the 1st, so 01. Now I have all of my first of the month. So I'm just going to go ahead here. I'm going to find and select, go to special, visible cells only. Where is that? Here. Select that, and then I'm going to paste that in. Hopefully that works. Now when I remove this filter, perfect. We now have our payments for each of the month. Now, for our present value formulas to work, the net present value, which is the future value of the present value of all future lease payments, we need to add some zeros here. So to do that, I'm going to navigate to the end of the lease, and then we are going to drill down on this column. Again, we're going to go to find and select, go to special, and in this case, we're going to select our blanks, and we're going to put in 0 there. Now, there's a few shortcuts involved in that. I pressed Command, I use a Mac, but nonetheless, we now have our lease payments. So now that we have our payments, our lease payments, and our dates, we can now present value the lease. This is the first step to getting our lease liability. We have our discount rate right here. Let's use that. We have our lease payments here. Let's use that, and then we have our dates of the payment. Voila, we now have the present value of the lease over this period, which is $32,674. Just to note, there are other present value methodologies you can use. You can use MPV. You'll see there's no date requirement, so it's not nearly as accurate as a XMPV, and that goes with the PV as well. So just like using daily, if you want best practice, if you're going to do something, you might as well do it right. So that means daily calculations and using that XMPV formula. No one, including your auditors, can really rebut that. You're going to be really solid in terms of when the auditors come. You'll probably know more than them thanks to watching this video. So next up, we just want to apply this formula to the rest of the calculation. So how do we do that? Well, really simple. We want to lock in our discount rate because that's not changing. They'll only change if we have modification accounting. So let's lock that in here. And then the last row, that's never moving, and either for both the payments and the dates. It's going to navigate down here, paste it in. Now we have the lease liability done. Now we need to calculate the lease liability post payment. Obviously, when you're making a lease payment, now that this is coming on balance sheet and it's a liability seen as very similar to a loan, you're going to be incurring interest, but also like a loan, when you make a payment, that reduces the loan balance. So we now have that. We can again just paste that in. Really simple math here. That's just A minus B. Next up, we need to calculate the interest on the lease liability. So the thing we have to do here is work out the daily discount rate. So that is a simple formula where that is required. So that formula, essentially we're converting the interest rate to a daily amount because our calculations are daily. So we want to compare apples with apples. So this is the formula here. I'm also happy to provide the calculation template that I'm doing here. If you like, just reach out to contact@cradleaccounting.com. That is contact@cradleaccounting.com, and we can provide that for you. So here we now have the daily discount rate, so I can apply that to the lease balance like so. And again, we're just going to lock this amount in because that's not going to change. So here we can then calculate. So we want to not quite do that. We want to times that by the discount rate. Just putting that in there won't do much. And then here we are going to lock that in. Excel thinks we need to reformat this cell to make it a number. So I am just going to copy that over. There we go. So that's $5.87. So then again, we go to the calculation. We put that in. Now, what does interest do to the lease liability? It adds to the balance. So now we are actually good to go. So we finish this off here. And we have now calculated the lease liability in compliance with ASC 842 for an operating lease. Done. Really quick check though is you always want to make sure this balance goes to zero, and here we can see it goes to zero. We pay on the 1st of the month, so our last payment's actually December 1st. That removes the balance. So great. Next up is the right of use asset. So this is a little nuanced, and funnily enough, for an operating lease, it's more complicated than a finance lease. So go figure. You can thank the accounting standard setters for that. So to do this, we first need to work out the total days of the lease. So I'm going to use the count function in Excel, navigate to the dates, and now we have the dates. Now, next up, we need the total expense of the lease. So what's that? We're just going to sum up our lease payments, and that's going to come to $36,000. Then we're going to divide that 36 by 1096 to find our daily expense. Now that we have the daily expense, or the straight line lease payment, because we straight lined it over the course of the lease, we can now work out the amortization. So first thing, you're seeing a bit of a theme to make this come through. We're just going to lock it in. So this isn't going to change. This results in the lease, the total lease expense being the interest plus the amortization is a straight line amount throughout the lease. Now, how do I calculate the starting balance of the right of use asset? Well, it's a little nuanced, but the biggest component of that value is going to be the lease liability. Then if you have things like direct costs, any incentives before payments, that can impact this value. In this case, we don't have that in our scenario. Then we need to calculate the amortization. That's going to be the straight line lease payment less the interest. And then we just have the starting balance less the amortization. That's our closing balance for the day. And we can just then copy that down. And if we do this, we go back up. We now have calculated the right of use asset balance in compliance with ASC 842 for this really straightforward lease. And as you can see, that balance goes to 0 at the end of the lease. So perfect. So that's the calculation of the right of use asset. And as I mentioned, this amortization amount needs to be a straight line amount for the expense plus the interest, or the amortization plus the interest. So you'll see that's 32. And if I go down here, it's 32 every single day. And this 32, surprise, surprise, adds up to 36,000. So the actual lease expense for an operating lease will always equal, just like it did under the previous accounting standard, just where you expense it to the income statement. The difference is the timing. So the cash payment won't exactly equal the expense. So just bear that in mind. Again, if you use Cradle, you really don't have to worry about that type of stuff. The software will automate it all for you. Last but least in this video is to go through the journal entries. So how does that work? So the journal entries, remember, we now need to bring these balances on balance sheet. So that's where we'll start. So we're going to bring the lease liability on and the right of use asset. So we're going to be debiting and crediting something. Let's just move this up here. So what are we going to be debiting? We're going to be debiting a right of use asset. We're going to be crediting the lease liability. Why is that? Well, the asset is a asset account. That's how you debit to increase. And the liability is a credit account. That's how you increase. So that is establishing, excuse my spelling as well, RU asset and lease liability. And here we can just do RU and LL. Perfect. So that is our first journal entry. This will be on January 1st. That's for our entry, and let's just keep the dates consistent. I like to use the international format just so everybody can follow along. Next up, we then need to capture the lease payment. So what's going to happen there? Well, we're going to be debiting the lease liability because that's a credit balance that we want to reduce. And payments, we're going to put it to cash because essentially that's where it's going to end up. So what do? We take that payment right here. Let's get our signs right as well. So let's move this. Make it a credit. Perfect. So now we've captured the lease payment here. So we have that locked in. Then last but not least, we need to capture the income statement. So first thing we're going to do is capture, well, the expenses. So let's do it. Now, for operating leases, the key here is it's still classified as a lease expense. So we're going to capture that interest expense first. And let's do that. So the interest expense for the month is going to be the sum of the interest for the month. So it's going to total that up, which is here. And that is the interest incurred on the lease liability. But again, remember, it's classified as a lease expense. Let's get our dates here as well. Now this is the range, right? So this is from 2023 to the start of 2023, being the January to the end of January. So here's our journal, and I like a bit of room to breathe. So let's then bring that in, and then the last expense, you probably figured this out, interest expense on lease liability. Our last expense is that, and we just, sorry, we're messing around here a little bit, but the last expense here is the one for the amortization charge. So what are we going to be doing here? So we got another lease expense, but in this case, we will be crediting the right of use asset. And that's going to reduce the right of use asset, which needs to happen because it's eventually going to go to 0 at the end of the lease. So what is the amortization charge? So again, it is for the month right here. And then we put that in, and that's our amortization. Perfect. So now we have done the journals for the month. A quick check just to make sure before you post your journals, if you want to make sure these are working, I can just sum up my right of use asset journals. I can say I'm getting 31,839, and then we go to the end of the month, 31,839. Perfect. So there you go. Now, this is a really simple calculation. This is payments don't change. We're not calculating the current, non-current. We're not calculating any of the disclosures. So I'm doing the most simple, basic version of calculating a lease liability and right of use asset under an operating lease. If you want these journals automated, if you want these calculations automated, if you want the disclosures automated better than anyone could do it ever manually, and then all the financial statements, which can be ticked and tied to these underlying calculations, try Cradle. You've got a free 30-day trial. You've got nothing to lose. I'm an accountant. I used to work at KPMG. I think you're crazy not to at least try it, because the amount of time you're going to save is incredible, and also it's incredible value as well for yourself and your company. This allows you to leave home a little earlier too, or should I say leave work to get home a little earlier. But I hope you found today's video really useful. Like, subscribe, all of that fun stuff. But more importantly, if you have any questions on these calculations, let me know. I'm going to answer every single one if you're curious on how the calculations work. And last but not least, I have not covered is modification accounting. That's a whole can of worms. I may make another video. Hey, if you want another video on modification accounting, just let me know and I'll make that as well.